Hi everyone, in this video I'm going to be talking to you on how to manage your finances in a small business. So without further ado, let's get right into it. So initially, if you have a small business, what you really want to consider is having the 3 key financial statements. So your 3 key financial statements are your profit and loss statement, your balance sheet, which is your statement of financial position, and also your cash flow. A lot of people make the mistake of expecting your profits to be your cash and mixing your profit and loss statement and your cash flow, and that just causes a lot of hassle. There are a lot of reasons why your profit isn't equal cash. So some of the things that you can think about is your timing reasons. Another thing is when your cash comes in and out the door. So if you're looking at relating to your customers or your suppliers, for example, if your customers pays you late, you may recognize it as profit, but you may not receive the cash until later on. If they pay in installments, again, that's another example. Think about your suppliers then. If you have to pay your suppliers early to try and get enough stock, or if you pay it early and get some sort of discount. For example, a lot of subscriptions are upfront, and if you get a discount if you pay for the year, then that is another thing that you want to think about as well. Know that your profit isn't equal your cash. The second thing you want to think about is having a specific business account for your business, which is completely separate to your personal account. And I know this may seem very daunting, but no, it's very easy. You Google business accounts and you can create a debit account or credit account depending on what you want to do for your business, like you have as a personal. This is because you want to separate your business transactions and your financial transactions for your personal self in 2 separate accounts. And the reason why you want to do this is when it comes to reviewing your business transactions, you very want to be clear exactly what is for your business and what is personal. You don't want to be spending time reviewing your statement and picking out throughout the year exactly what is business and what is personal. Your time is better spent elsewhere, and you don't want your accountant to be able to do that as well. This is just not good use of their time. So definitely have 2 separate accounts. Think about what flows through, and you'll definitely be more clear with being able to get a snapshot of what's happening within your business. If you have personal expenses that you want to expense, looking at using your personal account and then expensing it from your business, that is a better way of doing it than putting everything on your business account and then figuring out, okay, which portion of it is personal, which portion of it is business. So having 2 separate accounts is so vital and important for you and your business. So treat them as separate, definitely. The third thing that you really want to think about is paying yourself a fixed salary. Now, when you look at your fixed salary, you can have a fixed portion and your variable portion. Say, for example, if for a couple of months when you're hitting those targets or exceeding those targets, you want to pay yourself a bit more based on what your revenue is and what your profitability is. But definitely make yourself a budget and have a salary line looking at what your salary will be and budget a set amount for you. This actually has a couple of different benefits. So one of them is that you have guaranteed sustainability. So within the first couple of years of when you're starting your own business, you will have a lot of fluctuations. You have some good months, you have some bad months, and you really don't want to be struggling personally if you're having some of those low months. You want to make sure that you have enough money set aside or planned that you're going to go and pay yourself and just and allocate a certain chunk of that amount to yourself. What you really don't want to do is take your money from the profitability, because your profitability should be reinvested back into the business. And I say this again, reinvested back to your business so your business can actually grow and look at other opportunities, whether it is spending your money on CapEx or OpEx. So for example, your CapEx is your long-term projects and your OpEx is your day-to-day. You very want to be taking that profit and think about, okay, what is it that I can do to reinvest within the business to be able to make the business grow more? So if you are having to consider your wage after your profits, then there's definitely something wrong, because you may be, say for example, if your profit is turning over £600 and you take £600 from your business, you then have nothing to reinvest back into your business and for it to make it grow. So definitely think about paying yourself a fixed salary. If you were hiring other people, you wouldn't let them just dip into the profit pot and pay themselves if it's doing a good month. So why would you do that for yourself? You know, you are technically an employee of your business, even though if you're the only one, that doesn't matter. So pay yourself a fixed salary. So these are the 3 quick tips, what you should do if you are running a small business and how you should manage your finance. So if we should recap, number 1, definitely have 3 statements, having your P&L, your balance sheet, and your cash flow. Number 2, you want to have a separate business account and personal account, so then your transactions are so much easier to digest. Lastly, you want to pay yourself a fixed salary. So hopefully you can put this into practice. Let me know in the comments below if these tips have been helpful and what you want to know about financials within your business in the future. Thank you so much for watching, and I'll see you in the next one.